What's going on, guys? Welcome into your energy news beat here on this gorgeous Friday, February 5th, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. It's been a busy week. How you doing?
We have a hall pass to go, and it is a beautiful day in the neighborhood.
Now, it is a great day. We have a hall pass together. It is also Friday, so stay tuned after the show for our exclusive Fridays with DRW. You can check him out, www.hottakeoftheday.com. I would subscribe to his Substack, probably some of the best in-depth stuff you'll listen to. We'll get him at the end of the show. You can check out what we have, all that in a bag of chips to my left here. But first, guys, just continue to subscribe to the Energy Newsbeat here on YouTube and our website. It's the best way to stay up to date on all of your energy finance stuff. I'm telling you guys, hit that one-click notifications button on energynewsbeat.com. It's legit stream of consciousness news injected into your veins. It's all the energy and more that you will ever want. Highly recommend go check it out. As we look at some disappointing stock data or U.S. labor data actually came in, but what's interesting is top-line numbers did well, so I'll cover them first. Top-line equities, about 0.3 of a percentage point on the upside. Nasdaq traded about 0.5 of a percentage point on the upside, and then about 0.25 of a percentage point for Dow Jones. The interesting part is Labor Department came out today and said we only added 49,000 jobs, slightly below the 50,000 expected. While the unemployment rate did drop, there was a huge number of people that just quit looking for jobs. And that's really when you talk about the difference between what unemployment rate only counts people who are looking for a job, especially in you get out of work for so long, you drop off. I mean, I know two people who have decided to go back to school. They're not now included in this numbers too, and see that's how the unemployment rate gets fuddled a little bit. It's very interesting how who's included and who's not. It's the people looking for a job. So if you go back to school, which a lot of people I know are, you all of a sudden now aren't counted in the unemployment per se, and so that's why we see that number fall. I don't think anybody buys that we have only 6.3% unemployment, but that's how the number is. I, for one, vote we change the way we do that, but that's for another story. The quote out of from CIO of Independent Investment Alliance, Chris Zaccarelli, he says the jobs number were particularly underwhelming as far fewer jobs were expected. Ultimately, the stock market is anticipating continual healing in the economy because it has moved higher because of federal stimulus, which is arguably the biggest story. And so that's the key. Because jobs numbers come in low, it looks like we're going to have more stimulus, which means markets rise higher. Free cash markets go up. So that's why you see top line numbers rising. Even on the crude side, crude was up a percentage point. Top line headline front month contract 56.82. It got all the way up to 57.29. When we recorded this morning with DRW, we were at $57 oil. I mean, last yearly high on that one. Gotta love it. Brent now trading 59.37, so can't quite break that 60 more. Back into the WTI contract was only up 0.9 of a percentage point, currently trading 53.67. Natural gas dives 2 percentage points. Really off nothing other than the fact that all of this, really bear or bullish weather data, all of the bullish stock data, it's already been priced in. We're sort of, not buy the rumor, sell the news. We've been going on an insane bull run. Generally, there's a relaxation. It comes back down to earth. What's interesting about natural gas is it's the mostly professionals that trade it. There's very little day traders out there. So if you know the schemes, you know what you're looking for, you know the concepts, you know structure, you can follow price. You can actually see it's a little pullback here. So that's why you see about 2 percentage points, in my opinion, fall off. Natural gas currently trading $2.87, back into the curve $3.02 even. That's 1.5% on the downside. XOP was basically flat, up 0.1 of a percentage point, 69.87. OIH was again basically flat, 0.07 percentage points on the upside, 177.51. In terms of our equities, biggest movers on the downside, CNX, they're down 3.5 percentage points. Amplify down 3.7. Cabot down 4.5, and Telrinian, they're down 5.6. Couple numbers on the upside. Ring Energy, they're up 16 percentage points. Abrejos, DRW is going to bring them up in a little bit. $3.50. They're up 20 percentage points. And American Resources Corporation, Go America, up 26 percentage points. Wild week internationally, Stu. Finished out the week for us. What do we got?
Oh, man, we got a big one here. This is France and Germany. They're having some discussions before they meet with President Biden, and that is they're trying to get together on their Nord Stream 2 pipeline issues with Russia.
Mhm.
And because France has probably the most worldwide nuclear
Yep.
fleet, they don't rely on natural gas as much. So the French uh, um, prime minister is not nearly as worried about it as Germany. Germany needs natural gas bad in order to complete their transition over to um, renewables and everything else. Natural gas is a huge discussion point on that. So maybe this is a quote from Merkel. This maybe the differences aren't as big as they appear, but the fact that this is a controversial project being discussed in Europe is very clear. So it'll be interesting to see how the Biden administration handles this one. Second up on the block, Australia is going for this one again. And they've got the biggest battery for supply in the world. Big batteries will play a major role in the gaps of the gradient retirement of coal and gas fired assets, says Chairman Morris. The title of this article is World's Largest Battery to be Built in Australia in the Coal Mining Hub. Now, Michael, yesterday we had that story about the grid being has to be able to sustain the 50 kilowatts.
Mm-hmm.
The largest battery will only hold their amount of folks for 5 minutes. So there is a lot of things we got to keep an eye on for these batteries as we roll them out to support the grid.
Yeah,
And
storage is the biggest issue. How
Yep.
do you store renewable energy? Because renewable energy comes and goes. So I think that's where it is. And right now, the storage messes we had are arguably worse for the environment than drilling for oil and gas. Some open pit mining is one of the most pollusive things you can do. Open pit mining? Go Google open pit mining for me. You guys will see it's just dust particles everywhere.
Well, and also go search mining, and you'll see that child labor is being abused around the world. So, but that being said, I think we are moving forward with that and all that. So we
As I
have
keep
all that
saying,
taken
whether
down
we
to
like it or not, don't be the old curmudgeon who's valuing things off
hey,
fundamentals. Oh, ESG isn't here. It's all about revenue and free cash
oh,
flow. No, it's not.
I thought you were about to beat me up about being a fundamentalist.
Not quite yet. I'll save that for another day. Anything else internationally for us today, Stu?
No, I'm ready to get out of here.
Yeah, Hall Pass coming up quickly, guys. But first, we need to cover quickly two stories. Well, really three. First, I've got rig counts today. They came out, as I mentioned. That's going to support oil prices +8 for U.S. rigs. Currently, we have 392. Canada dropped 3 after really having 2 straight weeks of just fat builds. They're currently at 171 rigs. Internationally, 12 rigs for added. One earnings that dropped on the oilfield services side today was Liberty's. Remember, they have fully acquired OneStim, which is basically Schlumberger's U.S. onshore operations. So now it's very interesting to see how some of these economics look. Revenues in quarter four, $966 million with a net loss of about $160 million or about $1.36 fully diluted share. Adjusted EBITDA was $58 million, which excludes stock-based compensation of $17 million. Got to pay themselves, of course. And annualized adjusted EBITDA of an active fleet of about $4.4 million. Revenue was $258 million for the quarter, which is a 75% decrease from the third quarter. So that $966 million revenue, that was for the whole year, which is not terrible. I mean, they did. I'll have to go back and look, but they did like $500 million in revenue. Their first, so if you talk about the bolt-on acquisition, really like it. Adjusted EBITDA in the quarter was $7 million. Active frac fleets increased to 15.8, up 68% sequentially. That's key right there. We pumping, baby. They love themselves higher oil prices. Street didn't necessarily like this earnings statement that, they're down about 3.6 percentage points, currently trading about $12.62. But, they expect to maintain 30 frac fleets while working in the first quarter of 2021. If they can do that, they're going to have a great quarter one. And that's, I think, what's going to be really interesting. Quarter one could be, we talked about how for some upstream companies, quarter two or quarter four 2020 would be good. Quarter one 2021 is going to be good for everybody. We're seeing rig counts go up. A lot of these frac fleets are going back out there.
Crazy.
It's just,
30 rigs, 30 fleet frac, big.
a big
They can
frat,
do
maybe. One stim.
You
All
know
right.
what? I like those employed people.
Yeah, me too, exactly. Last story we got before we let you guys get out of here. Chevron Corporation, they announced that it has submitted a non-binding proposal to the board of directors of Noble Midstream General Partnership, the general partnership of Noble Midstream Partners, to acquire all of the common units representing the limited partner interests in NBLX, which is the ticker symbol of Noble Midstream, not already owned by Chevron and its affiliates. To give you guys an idea, there is Chevron owns interest in Noble Midstream Partners, and it's about a 5% premium they want to buy him out at, currently about $12.47 based upon the closing price as of February 4th. So, this just dropped this morning. Yeah, anytime you can acquire midstream assets, it's good. I think this is a good move for Chevron. I think they just, you want to talk about consolidation. We're going to bring that up with DRW here in about 45 seconds. So, this is just, again, all around combining Chevron, all that jazz. Stu, anything else before we kick it over to DRW?
No, let's kick it and run down that road.
All right, guys, we're going to let you get out of here, get back to work, finish up your day. Thank you for checking us out on the world's greatest daily energy show, Energy News Beat. Stick around. DRW, up now. Well, as always, David, really appreciate you joining us here on this Friday. A lot happened this week. I mean, you're going to talk about earnings stuff. Oil's on a tear. I kind of just want to start with earnings as a whole, get your holistic view. We had a bunch of majors drop. Last week when we talked, we had a little bit. Any thoughts on what happened on earnings this week and how some of that stuff's looking moving forward?
Yeah, I mean, obviously, we're in a totally different environment now with oil at north of $57 WTI and touching basically 60 Brent. It's amazing how since the vaccine news in early November that these guys have absolutely rocketed. I mean, Exxon was a low of 32. It's up to trading close to $50. But when you look at the core earnings, so I'll just talk about three this week, and it's not to belabor the point, but Exxon had a $22.4 billion loss in 2020. Conoco lost $2.7 billion, excluding what they had with Concho, because that deal closed in the 2021, and Chevron lost $5.5 billion. And when you look at the underlying core operating cash flow, we had $14.7 billion in operating cash flow for Exxon against $21.4 in capex and $14.9 in dividends. It doesn't take a lot to do the math to realize that there was a $25 billion hole that was dug in Exxon's balance sheet. And yet at $57, people are feeling very, very optimistic. We have to talk about where prices are going to understand that, but there is no doubt that the excitement is on and that people are looking way past earnings. They're not worried about Biden administration restrictions on permits, on greenhouse gases, on emissions, on any of that. It's party time in oil and gas right now.
And Exxon's doing a bunch of IR stuff. They got 2 new board members that are coming on. It sounds like they're kind of taking that swing into the ESG. So it's pretty interesting. I noticed you wrote an article on Wednesday about that. So you guys should check that out. Hot take of the day. If you're not subscribed, do that now. Speaking of prices, Stu, you've been on me about international pricing for all week on the show.
Oh, it's been brutal. Thanks, Michael. There is such a worldwide mess right now. I mean, it is goofy. You got Turkey that is broke. They're looking for cash flow. They've been helping Libya. Libya is coming back online. Then you have Russia. We all remember when Russia just says, hey, by the way, we're going to take out U.S. shale. So then we had the JMMC this week say, we're 101%, David. We're making sure that OPEC is meeting all their requirements. I really don't know what's going on because there's so much worldwide weirdness going on. What are your thoughts on weirdness?
Yeah, I mean, I think everyone is just, it's the era of easy, cheap money, and everyone is looking past risk right now. And the thing we know about risk is risk doesn't matter until it does. And so you have, the sanctions against Iran for the nuclear deal have been in place, I think, since 2015. Right. And, when Trump backed out of there, at some point, sanctions are meant to lead to a change. And so I would expect to see Iran coming back to the market with oil. Iraq hasn't been complying. They're supposed to make up some volumes. Are they really going to make up volumes at $57 a barrel? I really struggled. Now, I will say OPEC has done a very good job messaging that they're going to let demand take over and that they're all going to comply. But I'm not sure really that they're going to, because what will the punishment for cheating be? And so the next real leg to me is when Saudi has to deal with this 1 million barrels that they took off the market. They've
Right.
clearly just moved from their moving oil out of their own inventory that they put there in March and April of last year. But at some point, they're going to have to say, here we go. And there is 8 million barrels a day of additional oil to come back to market. So I don't feel like the market is tight, and yet the paper trades up like crazy. Natural gas is up over $3 an MCF. Again, I think risks abound. And as we saw with GameStop, there was a really good reason that it was going to go up when short interest was over 100. But as soon as that short interest fell apart, the stock fell down to, I think it was, down 80% this week. So there's some challenges out there, in my opinion.
Cool.
Yeah, no, I think, with oil trading at $57, it's, we mentioned this when we were talking right before we started recording, the top has to turn a little bit. And speaking of some of that, there was some M&A action that happened this week. And, obviously Chevron came in and they're not talking to buy out Noble Midstream. Northern had an oil and gas non-operating agreement that happened over in the Marcellus. What I just can't get over my head is how is the shareholders at Concho talk about selling at the lowest possible time. Imagine what Concho could have been worth now if they had held out. So do we think we're going to start seeing a lot more M&A action coming up here because people are maybe starting to realize at the top? Or do you think a lot of these people are saying, we see $80, we're going to hold out longer?
So let's talk about Contra just for a second, because I mean, in essence, it was equity for equity. So it wasn't like they took cash. And Conoco, I'd have to check actually, but when they sort of announced the deal, Conoco was substantially down from where it is. So clearly, Conoco is not a high beta name. Like this morning, we're watching Abraxas jump 35%, has the smallest float, a minuscule micro cap, but like there is a blow off top that is occurring right now in energy where all the high beta names that even in a $50 or $60 world don't look good, but there's this option value and people are racing to get gamma and theta and delta and alpha. All the Greeks are coming in. And so where would Conoco be? I mean, certainly it would have been higher, but at the end of the day, mergers have to happen because we're fighting the Biden administration, we're fighting climate change, we're fighting Larry Fink's letter this week saying, if you're not being ESG carbon neutral as a company, we're going to vote against your board and your management team, which, I mean, let's be clear, this is a wealth management firm that we didn't elect. They're the biggest, they've become big, and now they're throwing their weight around, much like Apple did, like Google did, like Amazon did with Parler. And we've moved past this government laws, and we've moved to big organizations deciding what's good and bad. In oil and gas, for us to be able to survive, we need to come together. We need the big companies. We heard the rumor that Exxon had talked to Chevron in the end of last year. That would have been a big deal to make a meaningful U.S. company that can survive.
Are you in favor of that? Because that's an interesting thought. So is at that level of M&A, Exxon, Chevron, you think that's something that should happen?
Yeah, I mean, to me, Exxon Chevron's probably not the right one. I still strongly believe Exxon should be buying EOG. I think EOG should be taking over all of Exxon's onshore operations, and that Exxon can focus on where it's good in the Gulf of Mexico and international projects. I think that Chevron will buy someone else, and I think that all these micro caps that are just going crazy need to use this as an opportunity to either raise equity because their balance sheets are horrible, which will give them more longevity, or they need to do a relative value merger with someone else who can refinance the debt. I mean, it's not like we've seen guys come out. Intero refinance $500 million in notes at 7%. Money is free, and there's still huge interest there. One deal I did want to talk about that was interesting this week, Northern Oil and Gas, Bakken non-op, ended up doing a deal in the Marcellus for some non-op. And what was interesting was they were actually doing an equity raise, which like Enerplus did an equity raise alongside their Bruin acquisition. Northern has done one. They priced it at $9.75. And as of this morning, they were actually up almost 10% to $11.50. And so it's interesting that I would have expected that would have really soured the market. But I think the market is seeing that equity raises at any valuation to buy assets that you can bolt on is a good piece of work, which is why I think we're going to see M&A really accelerate here in March.
Cool. Hey, David, for the last question for the Take of the Day Fridays, Okay, are you ready?
Yeah,
Sitting
ready.
here kind of thinking about earnings next week. What are your predictions for earnings? How do you think we're going to roll out, and what's going on?
I mean, I think earnings are going to be continuing to be horrible, but much like we saw in 2020 with all the other industries, nobody cares.
Yeah.
Everyone is looking to the future,
Yep.
and with the Chinese data coming out like it is, with PMI coming out like it is, like there's a lot of cracks here, and on top of that, we're seeing huge inflation. And in order for the Fed to manage huge inflation plus missing earnings, we
Yep.
have to start thinking about interest rates. Next week won't be that time, but the earnings will be abysmal and no one's going to care. But in my opinion, we're close to, the market can't go up and to the right every single day.
Just one last shout out, David. Flamethrower Friday released this morning, and it was absolutely Mark Rosano. Outstanding article this morning on inflation. Great job.
Yeah, absolutely. Yeah, no, sign up for that's for newsletter subscribers, and we really try and bring original content that is not pushing a narrative, it's pushing data and thought and analysis. So for sure, it was a good piece by Mark, as always.
Awesome.
Great.
Well, thank you guys for checking us out here on Energy Newsbeat DRW. Thank you for joining us, and we'll wrap it up there.